This is Nifty chart visible to everyone.
Yes.
Yeah, thanks for confirming. If you remember in the last webinar of the first week end of the January, which was around the 5th of Jan, have mentioned 23,500 as an important support, as this was the range for last few sessions, 23,500 to 24,000, 24,100 zone. This is the Nifty spot chart. So if this breaks, the immediate target comes around 23,000 because of this 500 points range breakdown. Overall, 23,200 remains the critical was mentioned. Give and take some few points here and there when we are looking at major support. Last week, first day, index did close below 23,200, but post that it recovered back for the full week. It held on about 22,200 and the weekly close was about 23,200, right at a border, not exact. You can say out of the woods completely, not at a much far from the 2200, but give and take few points, it is as of now holding. What is the important thing to watch right now is, if you observe closely, let us move to Nifty futures chart. Yeah. There was this good volume based selling on a Monday. That's on 13th January. Post this, index was unable to hold above these highs, Nifty future, and volumes also could not match up to these volumes, even on a reverse side, that's on a buying side. And market has more or so traded within this range for the balance of the 4 days. Market has Nifty has nicely consolidated in this range. This is, in a sense, we can say a pause before a big trend is starting, or a pause before a next move. Why this pause was needed? Because there was a one-way slide right from 24,200 plus till 23,100 change in Nifty future, approximately 1,100, 1,100 points. Whatever you look at, whether it's future or spot, give and take few points here and there based on the premium of future and the premium difference between future and spot. So 1,000, 1,100 points move and then some cool off. Even this move from 23,800 to 23,100, 700 points move in 3 days, 4 days, and then 4 days cool off. Now, what does market indicate here is, even if in this cool off, there was no enough supply, there was no enough volume. When there is no supply or volume, first thing we need to understand is actually when we are trying to analyze charts based on the volumes and price, one thing we need to have even in our mind is look at a volume not in terms of a volume, but as a supply or demand. And look at the price support or resistance as a supply zone or demand zone or supply zone. This will give us a much better clarity in analyzing the charts. I'll be covering this in detail, where I'll be starting with the basics of price and volume and all the complete our learning course from mostly from February, first week, hopefully, post budget. So in that, I'll be covering these things in details when we start the basics of price and volume, and then as we move ahead towards the different types of ways to look at the charts using volumes and price, what should be given importance, and many other things will be covered step by step. Then we move to volume expansion and other things. So why this makes important is when we look at it as supply instead of looking just as a volume. it gives a one different way of looking at the chart. Supply is missing and the volumes are less, which means supply is missing. Now we need to question, why is the supply missing? There can be two reasons. Either the smart money is not interested to sell here, number one, or there is no enough demand to attract a supply. Either the smart money is not interested to sell here is a one thing, which means the smart sellers are not interested. Second way is there is no enough demand to increase the supply, to attract the supply, which means that buyers are not willing to quote higher prices so that the supply can get in. Because of which market has gone in a some pause mode or consolidation mode kind of. Now what happens is, now look at it from different way. First point, if sellers are not interested to supply here, so there can be two possibilities for this. Either they are waiting for some kind of event to happen, or they expect prices, the risk reward for them does not look so rewarding over here, which means there is a possibility of some pullback move at a higher level where they would be willing to supply than supplying over here. Same way it applies to buyers. Buyers are not, the demand is not getting in aggressively to attract the supply, which means they are not yet anticipating any big positive news flow or anything, so that they are sitting quietly and waiting for some kind of event to happen, or they are anticipating some lower level. So why should I step in over here? Supply, the higher the supply, the price drop will be faster on a downside. Higher the demand, the price rally will be faster on a upside. Which means the aggressiveness of buyer or supply or demand will be known based on the volume, this price combined with the volume. Not in just on a looking at both any of these in a separately. Only on a combination of both when we analyze, we can get some little indication. Now, in this, if you look at this here, there was high volume as well as the price rallied, which means demand was very high compared to the recent sessions. So buyers were expecting something, but what happened? There was no follow through to this move. These buyers were expecting something, but there was no follow through, no news flow or anything. They were waiting. Once their risk starts getting hit, or their stop loss stops getting hit or anything, or they think now this was just like a trapping move for based on some news flow. Retail was the buyer over here, not the smart money, in which case this got broken down. And look at these volumes, look at this supply. The moment supply has increased and there was a price drop, which means supply sellers were smart, sellers were serious, and there was one way slide. Looking at the, coming back to the present scenario, there is no clear picture which way market will move aggressively. I am speaking of aggressively, which means a big move any side, until and unless we get some big supply or volumes either here or after a say single minor up move or minor downside move, or there is some big price candle. There is a big price candle, wide range bar like this, supported with enough volume to get an indication of some faster move. Till then, the move can be slow and steadily. What is the likely scenario going ahead for the rest of the January series? One thing is very clear based on the last week move, is until and unless Nifty future holds above 23,420, the level which was mentioned consistently after Monday, until and unless it sustains above this, upside is capped and downside targets are open. Where can we get a downside target? We'll look at the next support. What can be the next potential support zone or anything? We'll comment it later. What happens if it sustains above this 420? If Nifty future sustains above 420, now as we move towards the expiry, there can be sudden moves in the premium. So give and take few points here and there. There can be some trapping moves, you can say, or some false move kind of, because of the premium shift of 5-10 points here and there. So you need to correlate it at the same time with the spot. Whether spot is also crossing these highs, or it's just the futures, or if there is a volume support to the futures move. Why volume support is needed for the futures and not for spot is, I have already cleared one thing in a last session. Is also I have mentioned this in a group couple of times, that futures is a traded instrument in an index, not a spot. So the actual money is bet in a Nifty future for a trading perspective, from a trading perspective, because of which volume indication in futures is much better and the earlier indicator that we may get some desired move in one direction. So in this case, once it sustains above these highs of 23,420 in future or relative level in a spot of these highs or whatever is the high of last 2 weeks, then we can expect a move till 23,800, 900 zone on a minimum. Now, why I call off 23,800, 900 is because once this supply is completely absorbed, probably this is the supply absorb going on. Once this level is crossed, that would give confirmation that this supply, whatever was likely to come below 23,500, is silently being absorbed, because of which we are not seeing an aggressive demand push from the smart money, from the smart buyers. And once the supply is absorbed, now they will start quoting higher price. The demand will try to push the prices higher, try to absorb the next level of the supply, and supply next is expected near the next resistance level always. Next is supply zone, which comes near 23,900, 800 zone. This is a mid, which was around the midpoint of this high volume candle of 6th January Monday. So once 23,420 plus Nifty futures holds up, then the move towards 23,900 plus is highly likely. Towards 800 to 900 zone is highly likely. And if this gets captured, then a move toward 24,200, 300 zone. Now, this is the very important reference level for complete January month, in fact, maybe even February month and ahead. Because this was a high volume green candle which got trapped away. There was no follow through and reverse back. So this looks most likely like a retail trapping move, a move by smart money to trap the retail. When these moves, such kind of moves happen, they do not get crossed easily. And once once these levels are crossed, the move on a higher side can be very big and faster one. So this is an important reference going ahead for January series, February series, maybe even ahead also in the 2025, until and unless we see similar kind of another move at a lower level.
workshop.
I request everyone to please mute whoever is unmuted. Unless you want to ask anything, you can unmute yourself and ask a query, and then you can mute again. Yeah. So remember this level for the complete, as of now, for you can assume it for a 2025 until and unless there is a change in that particular level, which I'll be updating in from time to time. And for the coming week, 23,420 remains an important reference level. Now let us look what can be the light downside targets. Once index enters this overlap zone of 22,800 to 23 zone, if this breaks away, this is a Nifty future. Let me move to the spot chart in this case because I have already marked something interesting there. This was the zone that is from 21,600 change on a lower side to 22,600 on a higher side, where index has traded for long duration during February to June 2024, approximately 5 months move, a complete, you can say, either consolidation mode or some, what we say, a pause or accumulation zone before some big up move was seen. This kind of overlapping moves, whenever they are breached, the other side gets tested very fastly. We have seen this on an election result day, and same can happen again. Even on the next day, we have seen a similar big upside candle. So 22,600 give and take 50 points here or there. This remains a very important support zone for the spot as of now. If at all price sustains below this 22,600, then a move till 21,600 can be very fast. These overlapping moves get crossed completely from one zone to a lower side zone faster way whenever price enters this zone. And there is a highly likely this 21,600 might even break up and give a move lower side. Why I am telling so? The reason being, what I've observed is whenever such consolidation moves get broken for a back to back repeatedly, which means once it has broken already over here, and if it again breaks here, then this will be moving towards the lower demand zone, which comes at a much lower level, which is around 20,000 to 19,000 zone. So on an immediate basis, 22,600 is very important support going ahead. If that goes 21,600 to 20, in a fast move, in a single day, in panic move, there can be a spike down till as there was till 21,100, 200, similar way. It can go down, but it should not sustain below this 21,600. First, it should not sustain below 22,600. And if that goes, the move till 21,600 can be a fast move. And below 21,600, if it sustains, then a move towards 20,000 to 19,000 zone becomes highly likely. So until and unless 2,400, sorry, 2,300, 420 in future or 23,400 in spot, 390 is the high of Thursday. So assuming a little filter, 23,400 spot, until and unless it's captured, downside remains valid. Above that, above 23,400, we can look for a higher side move in a Nifty until 24,200. Once this 24,200 plus is captured, once these levels are captured, which was the trapping move, then we can expect some good up move in a market. Good up move. So until and unless this is the major reference gets captured, do not invest 100% of capital. Even in stocks, you can have selective stocks, but always have some 10-20% in hand, because if there is any panic and big slide or downside, we can get even our desired stock some little lower levels. So immediate basis 23,420, above that 24,200. These are the reference levels to watch on upside, and downside 22,600, and below that 21,600. These are the major reference levels to watch for the coming week. In fact, till you can say even budget or even after budget. Anyone has any doubts in this, Nifty, or any queries, or if you want to share anything based on your studies, your analysis, whether it's Elliott Wave, whether or any different studies, whatever.
Hi, on Friday, how did you analyze that 23,350 future level will be the stop loss for up move, and market went till 23,340?
This was the Nifty future level.
Yes.
Everything is in a chart. Nothing to worry. What was this high of first 5-minute candle? 23,353 in a spike. Clear? 23,350 was the high around open. There is one important study of mine based on which I have designed a intraday strategy for a Nifty. I'll be covering it in details with many examples of this is highly applicable on Nifty futures, Nifty spot, you can say, on index, but this has a little less success rate on other index of say bank Nifty or in stocks. In stocks you can say this has a success rate of 70%, 60%, but in index it has around 80 to 85% success rate when it comes to Nifty. What does that say is, just to say, mention it in a brief, first hour high and low are very important. First hour high and low are very important. Got this point? So what happens is, when the first hour low gets broken, the high becomes a stop loss. First hour high gets crossed, the low becomes a stop loss. Why this becomes important is, as per my observations of last 10 plus years, after identifying this strategy and actively trading it till many years until I could trade intraday, and then I have to stop intraday because of some regulations or some time not being easily available as clients have increased or other interactions have increased, and I have moved more towards investment positional trading compared to the intraday. So till 10 plus years, since I am tracking, and even I track it till today daily, even though I don't take position daily, the first hour high and low, if a low gets broken, the 85% of the time, 80 to 85% of the time, the same day high won't get crossed. And if high is broken, the low won't get crossed, won't be broken again. Which means 80 to 80% of the time, only one of these will get broken, not the both. And in a market, it's always important of the looking at the higher probability based opportunities. That's what trading is all about. So 23,353 was the first hour high, number one. And please mute yourself. And if you observe this previous day support, index has reversed right around from 2300. This was the support from where it rallied on Thursday, and next day it broke below that support and it has gone lower. And I have updated, if I remember nicely, I've updated the level of 23,350 after 10:15, not before that. Because once these lows were broken, the morning lows were broken, then this becomes our stop loss for intraday. Clear?
Yes.
And if you observe my messages, most of the time after 10:15, whenever I update a Nifty future support or resistance, they are more to do with the morning lows or highs. This is the one thing. Or there is some major price-based support which has formed around intraday or on a previous couple of days or anything. Everything is purely as per the charts. In first hour high and low, I can tell you, even if you are algo trader, you can design some algo strategy with some your defined risk, defined instrument basis of doing spread or just call selling or option selling or put selling, whatever you prefer, or option naked buying and hedging it. 80% of the time you will be on the right side. This is time and tested over last 10 plus years. This has worked when Nifty value was somewhere around 6,000 or lower, and in fact any different levels of Nifty value till date. Even if you observe on this day, on Friday it could not cross that, and on Thursday it neither crossed highs once it broke these lows, but in fact lows did not broke decisively. One caveat in this is focus on candle close. Focus on candle close above high or low. You can observe even on Wednesday. Once the highs were crossed, this was Tuesday, sorry. And then this was Wednesday low. Okay, any more queries? Let's move to Bank Nifty.
पापा कहाँ पे? वेट शुरू मैं जाता भी संदीप रहेगा बस पहले.
Bank Nifty in a webinar of first weekend of the Jan, I have mentioned this range and the breakdown below 50,000. The targets can be all the way till 46,000 because of this 4,000 point long consolidation range breakdown. And already it has done a 2,000 points move. Post this breakdown, Bank Nifty, it has a target remain pending towards the lower side around 46,000 until and unless we see some counter big move with a good volumes and a follow through. There can be move with big volumes, but that can be a trapping move which we have already seen couple of times in Nifty future. So a good bottom chances of Bank Nifty are very less. At the same time, if it's enter back this zone of 50,000, 44,000 range, then there can be a possibility that a bottom has been made and it will be moving higher. Until then, there is no clear indication of big longs in a Bank Nifty here. Both the indices does not show any big upside as of now, irrespective of them being on a continued downside move for last few days or even last few weeks, or even we can say Nifty since last 3-4 months as well. There were pullbacks, and there can be pullbacks too here. Say if Bank Nifty moves above this Thursday's high around 49,500, it can move till 50,000 or 50,500. This green candle, 50,440, 50,447 is the high, so around figure 50,500 near about. This is important. And remember one thing, I'm adding it right now before I'll be covering these all the points again when we start our course. The breakdown candle highs are always an important reference levels. Breakdown candle high or breakout candle lows. If it is giving a breakout, the low of that candle, those are always very important reference levels. Why? There has been some enough force applied by the smart money over there to create a breakout or breakdown. Either that's the candle in isolation or a move which has triggered that breakout or breakdown. Why I mentioned this move, which has this point is in stocks, many times what we observe is in 3-4 days, there is a continuous up move or continuous down move, which gives a big breakdown and a follow through as well. In the stocks, most of the time we don't see single day move. So say even if you look at in this case, this was a move and there was a continuous follow through without even trying to enter back this range. So this is the very important reference level, and similar level in Nifty is somewhere around 24,200 change. 51,700 in a Bank Nifty spot. Until Bank Nifty sustains above this, the trend remains downside. Immediate targets and likely targets On a first basis 46,000, and if that goes, then downside 44,000, below that 42,000. Targets will keep on opening based on the price supports, or based on, say, it forms some another consolidation range over here between 48,000 to 5,000, and then it gives a breakdown. That's also a possibility, right? There cannot be, we cannot assume that there will be one way downside itself. There can be, say, some slide and then pull back, some slide. There can be zigzag move, there can be just consolidation and then again a trending downside move. It's the market's wish, the way it want to go. The path is best decided by the market. We can just identify the potential destination from the source it has started with. Remember this thing. The path is best decided by the market. We cannot direct the likely path. So it is always best to keep this in mind before we initiate a trade, specifically when we are trading an option. We assume now this move will be one side and we do not book out a profit which we are getting. And what happens? Market gives them reversal, it starts giving us zigzag moves, or even if it's moving towards of the target, we won't get a desired profit which we were expecting, or in fact which we were getting initially. Because of which I always mention as a hard and fast rule to book 50% position or partial position based on your position size, based on your risk appetite. Always book partial position near to double so that our capital is back. The risk which we have taken is back and riding the partial position for our targets. Clear on Bank Nifty?
Yes.
Yeah. No queries on this? Shall we move ahead? Before we move ahead, one look at the Nifty monthly chart. This is the fourth month of red candle in a monthly chart. But little difference in this compared to the earlier moves was the December month has not made a lower low on a monthly scale. And most of the time, if you observe, around 4 months, the market starts reversing back. After 4 months or about 4 months. If you observe here, if you observe here, if you observe here, 4th month. Unless it enters a larger correction mode. Here 3 months slide, this was the COVID. Here just 2 months. Here 3 months consolidation. It starts an up move. Here 3 months correction. Here 4 months. And this is the 4th month for now. So there is a highly likelihood there can be one way slide. Just mind anticipation based on the number of months basis. Since if index is looking to complete its downside moves towards 22,600 or even 21,600 or even lower side. So most likelihood what I am expecting is this is the 4th month. Market may move down till whatever level it is looking at, or at least partial of those move. And in the first week of the February, based on the budget, either on the budget day or after that, based on the budget reaction, market may complete its downside target and form some important bottom over there and reversal. What I mean is, I see a high possibility of green candle in a February if at all January is a red candle. Condition there is, if January is a red candle, or if in January from here on, if Nifty does not close about 23,600, then high possibility of a green candle in a February. Now, how do we utilize this information? Based on this historical pattern which it was observed on basis of four monthly candles of red, is we need to wait, have patience, get an indication from a volume and price, or at least on an intraday basis when it crosses the first hour highs. First indication you will always be getting based on the first hour high getting crossed, supported with the morning volumes. And then if we see a follow through volumes in the particular day, then there is highly likelihood of bottom getting formed. Given budget ahead, major event ahead, so there is highly likelihood of a big volumes on a budget day. So probably market may form some bottom on that day or after that week, in that particular week or so, maybe based on the budget reaction, or some big slide on a first day and then some consolidation, which we have seen last week, a range bound move within the particular candle, and then index may start an upward journey. This is just an anticipation as of now. Not able to take any trade immediately right now. We will have to wait. For now, the trend remains down because stop loss being immediate on a 23,420 Nifty future. And someone was asking something.
Yeah, I have been following you for some time. You
Yeah.
say like on a daily basis for Nifty future, 1 crore volume presently is like good volume.
Yeah.
For hourly basis, how do we make out like this much volume is a good volume? Like 50 lakhs or 1 crore in one hour volume?
Yeah. Look, averagely, what it has been observed is in the first hour, that is the initial hour, from 9:15 to 10:15, on an average, we observe volumes around 20 lakhs, 15 to 20 lakhs. Most of the time, 20 lakhs. And if the volumes are even little higher than this, there is a highly likelihood, little higher with meaning. So give and take 20 lakh if you assume. If these are the volumes which we are observing, then most likely that is going to be a dull day. Unless there is a follow through volumes in a next hour. That is after 10:15 to 11 till 11 o'clock, 11:15, 11:30. In that period, if we assume, if we get another 20 lakh plus volume, which means index is forming a volume of about 50 lakh plus by 12:30. If you see a potential of volume forming of 50 lakhs or higher by 12:30, which means in this case, either there has to be 30 lakhs kind of volumes in the first hour, sorry, 25 lakhs kind of volume in the first hour, and then a follow through volume in either in a next hour or suddenly around 12 o'clock, 12:30. In this case, there is a likelihood of a volume being 90 lakh, 95 lakh. And the more the volumes in a first hour or first 1.5 hour, higher is the chances of being a 1 crore plus volume day. And this volume we will be getting when we see some big moves in the initial first hour. In a market profile term, this is termed as an initial balance, or in volume spread analysis, someone follows 30 minutes, some can follow in a spread analysis, some follow 30 minutes, some follow 1 hour, some follows initial 15 minutes. What I have observed, best is to follow first hour high and low. This has worked since many years. If there is any changes being observed, then I'll update this. I'll change my strategy based on that. As of now, it has been working. Even in 2019, when there was a tax cut somewhere in the month of August or September probably around 20th of September or so. I think it was a Friday. Yeah, it was a Friday dot. Where there was a press meet of tax cuts, corporate tax cut, a big Nirmala Sitharaman candle was formed. Even on that day, first hour buy signal was triggered before the press meet started, before the big move started. And even on a budget days or even in many events, you will be finding this working nicely. This has worked till date nicely. When I speak of nicely, which means 80 to 85% success rate. Even in RBI policy days.
Okay, thank you.
So if you observe a 30 lakhs plus kind of volume in a first hour, then we can assume that chances of there can be good volume today. This is just an anticipation for us. Unless there is a follow through volume. If the follow through volumes is not there, say there can be 30 lakhs volume based on some news flow overnight, and then market becomes dull, no volume. The full day becomes dull volume day, say around 60, 70 lakhs volume, that's it. After the initial reaction. That can be the key. there has to be follow through support. So that's why I observed a volume around 1230 after the initial volume. What that gives a picture of how the volume build up. If the volume buildup is good, then by 1230 we'll be getting volumes of around 55 lakhs or so, 55 lakhs, 60 lakhs kind of range, which gives an indication high probability of 1 crore volume that day. High probability if you see volumes around 55 to 60 lakhs or even higher by 1230. Still, I am speaking it's just a high probable, not surety, because post that what happens is complete just a guesswork for us. But based on our analysis, based on our tried and tested thing, we can see there is a high probability, so we can anticipate a trade or initiate a trade because the risk, initial risk is very less there. This was the reason why I came back to this monthly, because there is going to be a big opportunity going ahead if you are alert. If the index comes till 21,000 and start forming bottom over there, or even if it tries to dip towards 20,000 to 19,000 zone and complete this retest and tries to form a bottom over there in by February 1st week, we should be alert based on that. Volumes will be indicating, at the same time price will give us indication, or range board consolidation will give us an alert. Combined everything will be helping us in a much better way. I'll be guiding it. And why I expect February 1st week most so is, one thing is the based on the budget, at the same time based on these monthly candles, and also major astrological events happening in the first week of February, around first week of February. Major one being Jupiter turning direct, and then Sun Mercury conjunction around February 9th, that is on Sunday. So give and take either Monday or Friday, there can be some potential bottom. 1st October 2024 was the Sun Mercury conjunction day. I'll be covering the importance of these things when I'll be having a session purely on what to look at the astro basis, some important points on astro basis of those things. Because I'm yet to make some note and important event for this calendar year completely. I have just now done till February. Once I complete the year, then based on those things, those important things, I'll be covering many things. 1st October 2024 was a Sun Mercury conjunction day, and this is one of the very important event to watch out if you follow an astrology, or if you interest to use astrology for a market. Always focus on this particular thing and respect it, this particular event. Sun Mercury conjunction day is one of the very important. The highs or lows formed near to this day, most of the time they remain for at least 2 months kind of period. They are most of the time are helpful in giving a trending moves or some good directional moves. And this event happens 4 to 5 times in a year. Being a trader, we get a good swings, 4 to 5 times good swing opportunities. There was this one side move in this case. There could have been one move and then again upside move too. That's also possible. There was one more here somewhere in the month of November ending or December, I guess. Sun Mercury conjunction. Let me give me a second. Let me check it on a mobile. Friday, December 6th. December 5th, top formed Thursday. Friday, December 6th, the previous Sun Mercury conjunction. There was one on 1st October, there was another one 6th of December. Observe this. And the next one is around first week of February. Now, use this information for yourself. Don't try to share it openly on social media or other places as of now. Let us have some detailed chart prepared based on that and some detailed study correlating it in a historical basis as well. These two has been done. Now third is coming in the month of February. That's around February 9th. This is how we can get some good moves based on pure planetary changes, astrology. This is Sun Mercury conjunction. There can be event of Mercury retrograde, which also has some important support, some trending, which also gives some good trending moves when Mercury turns retro and when it turns direct from a retro. While we covering these things in detail later on, most important focus mine would be on a majorly on a 3 planets for trading perspective is Mercury and then Venus and little bit on Mars. And one more important thing right now to share, Mars will be changing house on 21st, which means Mars will be moving from Cancer to Gemini. Those who understand astro, for them this would be helpful. If you do not understand, just keep this thing in mind. Whenever Mars changes a house, a couple of days here or there on its house changing day, market index gives a single day good move. So either Monday, Tuesday or Wednesday, any of one day among these 3 days, we will be seeing a big move in an index. Direction can be anything, up or down. There is no hard and fast that it will be down or up because it has given both sides move. No strong correlation that it will just give upside or downside, but there is a big move. Coming week, there can be single day big move, specifically Monday, Tuesday, Wednesday, one day of from these 3 days, because Mars is going to change house on a Tuesday from Cancer to Gemini. Right now, Mars is a retrograde. So it is moving backside right now. Be prepared with this event in a coming week. Major events are happening in the first week of February, with 2 of which I have already shared.